Hello and welcome. This is Mike Hamilton from Trade the Easy Way on Thursday the 28th of April. So three things this market are facing at the moment. One is the Fed, because the Chair Powell suggested that there could be some very aggressive rate rises around the corner in the next couple of months. We could be looking at anything from 100 to 150 basis points increase from where we are right now. That has sent the dollar, this is the dollar index, dollar basket, scurrying to new highs up here, new 2022 highs. So we've broken out. So unless this rolls over and starts really calming down, that spells a lot of problems for the markets. That means bond yields will rise as bonds drop, create problems in the credit market, and generally stifle consumer demand and attempt to stifle what is very aggressive inflation at the moment. We've got geopolitical issues as well as China slowing as well. So, however, if you now look at gold, if you have a situation where gold is rising with the dollar, in other words, their conversion, they're rising together, that is normally a sign of fear. And the last time that happened is the 07-08 crisis. In this case, we've got lower highs in the gold and at the moment lower lows. Now, you can see the huge support here in the gold. If this starts to rise and the dollar drops off, then that gives gold breathing space to at least break out and potentially get up to 2000 again. But this is, the US isn't even open, so all we're doing at the moment is crawling back into this last resistance level. And if we drop here, then we should see 1822 quite quickly. Alright, so gold is right on the line here with a very aggressive dollar, which is up till now has stifled the markets. It's been a terrible April, which is drawing to a close as far as trading is concerned tomorrow. So what the Nasdaq does, the rest of the market follows. So yesterday we ended up with a higher close, and we're picking up here. It's 10:30 UK time, 5:30 Eastern time. So it's all in the bag today. If this trend line support holds, and we can at some stage in either today or tomorrow, as we go into the weekend, close above 13.5, we can recover. All we're doing at the moment is peeling back into this horrible sell bar on Tuesday. So if that is all we're going to do, and we can't get past 13,300 or certainly 13,500, then we are potentially coming down to 2021 lows, which is right down here. 4th of March we were down here, 2021 at 12,220. Now note, last year we had a terrible April and then turned around in the middle of May. That's around about when the Fed will announce in 2021, and that's likely to be that's going to be the Fed for this May as well. So if we follow the pattern of last year, we've still got some downside to come. We could come back down to that 12,200 if we drop this level here and we cannot close higher here. So don't be put off. Don't assume that this, just because we've hit the trend line lows, that this is going to pick up. We need to close above this level here to have any chance of any kind of recovery. And at the moment, I think the easy thing for me to say is I think we'll just wiggle around here and then wait for a bit. But at the moment, all the highs are selling at the moment. We've had 3 levels down at the moment. Yes, we've hit a key level of trendline support, but if we drop back down to this support and continue, then this is going to roll over. do not assume that this is reversed, because there is no reversal pattern there. That is not a reversal setup. However, the volume has increased and it is decent support. Right, S&P, let's move faster. S&Ps sitting up on a higher level with volume. So same applies. If we can close above 4,300, we could see a reversal. And Dow has hit the 50% and is attempting to hold here, but the volume is rubbish. Note how the volume is really poor. So what I said about the Nasdaq dropping off still counts for this one as well. Still counts for all of them. All right, gold we talked about. Silver has rolled over with a strong dollar and is potentially sitting up down there. In contrast to that, if we have a quick look at the commodities, they have real relative strength. So despite the very high dollar, this is all sitting up. So if that dollar drops, if that dollar does fall off, this could send these scurrying much higher. All the pullbacks are bought at the moment, and we could potentially break this. This is wheat, currently looking at $11. We could get back to those highs. My projection is we will get back to those highs. This is a massive breakout, profit taking up there, and these pullbacks at the moment are getting bought. If you look at things like orange juice, I talked about orange juice ages ago, that's up there at the highs. Gas. So we are attempting to get back up here. We're coming up on lower volume, so this could be done short term, only short term. I'll repeat what I've said many times recently. Cyclically, this should be lower as we get into summer. So 54 down here is a massive area of support. If we can come back to this breakout area, that will be a super chance to buy that. Right, let's get into some stocks. Let's look at banks. Had Barclays announcement today. So if we sustain this move up here in Barclays on volume, and the volume has not been there this last 3-4 days, if this closes up here, then the pullback to 144, 142 is potentially viable to see us start to climb back. Interesting chart pattern. We were really flying high into very early January when this just completely rolled over. Okay, so if we can build on volume, Barclays looks good. Obviously it's got the fine priced in. Lloyd's is sitting up. We need to see, we've had some decent volume here second week in April. That at the moment looks as if that is higher. So we hold this structure here, we look as if we could go back to, if we can get a runner, we might get up there to 55 plus. So that at the moment is viable. Standard Chartered, wow. I don't know what's happened to that today. That must be results. It was threatening because we'd broken out, we'd held a major support level down here. So that dip in, what's that, February? Early March from 430, currently taking that up to 560. So that's the potential on these banks. Your high interest rate environment normally benefits them, and HSBC had a decent substantial pullback, and the buyers appear to be coming back in. So this could be a good opportunity to get into this one. 480, 490. We've had a recent high of 550, and there's a target there of 570. So these banks, on the face of it, if we go into these markets, look good. AJ Bell, pension provider, wow. Possible reversal target if we can close above 256, so that's definitely one to watch. Direct Line Insurance appears to be picking up. legal and general. Could be about to put in a reversal signal if we close above there. Ashmore. Keep a very close eye on this Ashmore. If the volume picks up there, these are potentially very good. Looking at retailers, volume has picked up. You can see on this volume chart down here, no fancy indicators for me, just volume. This is a 50-day average down here, and you can see we just started to get back into the 50-day average on this volume. So you can see the moving average was picking up here and then started to drop off here as this came off. But what volume is picking up, as you can see from the price. So we're coming up on volume. So if this level holds, we could potentially get back to that £3. We're just about to hit trendline resistance. So if we hit that and close lower, then that could tumble right back to this area here, this support area down here at 250. So, you know, if you got in on these on that bad day, well done. It proved itself up here. So if it shoots up there, then the pullback, it normally doesn't just shoot up and go. It's a slow, steady eddy. If we push up, then expect that to pull back before, and if we sit that side of the trend line, then that's a good opportunity. So this, I think the safer way to play this is to see if we can break that and then buy a kiss of that trend line down there around about 270. Because all the time we're under that trend line, we could just tap that and drop. Because if that's a bearish consolidation, then a knock into that trend line could see that just tumble and roll over. It's done it before. Look, yeah, this trend line was set from this high and this high. Notice how we got into this 280, 285, into that resistance area, and then saw that drop. So the same could happen again. Be warned. Sainsbury's. Ooh. Let's see if that's a key area for Sainsbury's. Very key area. So keep an eye on that. But that's come down on volume. I wouldn't jump into that unless that showed signs of picking up. Shoe. Shorted this at 140. Shoe is currently down here at 130. And I'm looking for at least 97. The full gap fill is 92. Plenty of time to get in this. 132, 135, if it shows it, could see that drop. Card Factory, I would love this to get back up to that 62 or even 64. So I'm going to leave that for now. Let's look at things like Boo and Asos. Really struggling. Now, if that closes above 80, that is with gap filled. Look, we had a gap down here from 9th of March. If we now close above 80, that is a potential reversal target. And same for, what's Asos doing? New low, immediate close above, that could be a reversal signal in Asos. Ted Baker, wow, this is, they put themselves up for sale, I think, haven't they? Lovely pattern down there. So you saw a sharp increase in volume down here on the 16th of March, and that's sustained. We're going up on lower volume. So it's definitely running out of steam. I certainly would not buy that, but interesting. Right, I mean, this is that one I talked about a couple of weeks ago, SSPG, airport provider, Royal Mail Group. So that dip has got bought so far. So at the moment we've got a 1, 2, so this could be a 3-wave. Coming up on volume. So keep an eye on that one. Chewy. That could be holding. Premier Foods. EasyJet. Attempting to pull up. W.H. Smiths. Yuck. Next. Again, this next could be a reversal signal. Right, quick look at miners. Right, so this Pan-African came all the way back to 19.8, has picked up on volume. I think there's still time to get back into this. You may see 20 again. I think you may see 20 again before that's ready. I would definitely be a buy down there. Hochschild. Ooh, keep a very close eye on that one. That's coming into a major level of support down there. Griffin. Profit taking and dipping. Let's look at basic materials. You've got Elementis. I think this one is potentially picking up. It's a slow one. Volumes are not picking up. So unless we see increasing volume, that's Elementis. I would not engage that one. Man Group, it's pulled back to support. I think that's got some. I think that's going to come lower before that's getting ready to go. So I would love to see that come off further. TPI cap. This is now this is getting ready to go. If we can close above 133, 134, I would get back into that. We're creeping back into this bar here. So 125 will be better, but the volume is beginning to pick up, so be aware. Glencore is doing alright. Rio, that's picking up on volume. Gem Diamonds, that's a very handsome support level on Gem Diamonds, having already been up there at 76. I think that is a buy if the volume picks up. So could be getting ready for a leg up here. Energy, Tullow, picking up off that low. Petrofact, sitting up, volume is increasing. So I'm holding out, as you can see, holding out for 159 on that. 150 could potentially be a problem for it. Gulf, Keystone, whoa. If you're interested in that, I would try and be patient on that. Gapped up. Right, let's leave it there. Right, I will talk to you about how I'm going to make some changes to the system. I know I keep promising this, but I've got a lot on my plate at the moment, but I do need to get back to you and communicate that because I keep missing deadlines. But in the meantime, this format of Monday night reviews and midweek videos is going to be the format for the short term. I'll get my act together and get back to you about the future. Happy trading. By all means, drop me a line if you've got any questions or any trade ideas. But be careful. Volatility with the geopolitics and the Fed round the corner. We've got Bank of England today. I think we've got Bank of England today, haven't we? We've got US advanced GDP today. and I certainly got a press conference. Right, all right, that's it for now. Have a good long weekend, and see you Monday night. Thanks, bye.